Okay, everybody, it is me, Gregory Mannarino, and it is Sunday, April 25th, 2021. You know something? I missed you. I missed all of you, and I really do mean that. I'm not just saying it. I love being out here with you and talking. I honestly do. Now let's do that. Let's just talk about what's going on and let's have a look ahead because that's what really this is all about. Actually, it goes beyond that. I would like to think of this blog as a way to put this freak show together in such a way that we can all win. Because I've told you since like forever now, I will never let you down and I will always keep you on the right side of this whole thing. But it's a freak show. I think we all know that. And again, there's opportunity here. And let's talk about that. So last week, okay, this market did sell off a little bit in aggregate, the major indices. I got that wrong. There's no doubt about it. I believed last week we were going to go higher, but look at my record. Go back and check my record. I'm not right 100% of the time, but I'm right about 90% of the time. I think that's unbelievable. And I'm not tooting my own horn. I'm just a guy out here who works extremely hard to keep you ahead of the curve. And sometimes I'm going to get it wrong, and that's just the way it's going to go. But let's again step back here and have a look at what's going on around us. I mean, number one, and I'm just going to cover it again here, we have a Federal Reserve determined to buy it all. Period. The end. Their mission is clear cut, to be the lender and buyer of last resort. They have become that. We have a current administration and the prior one and the one before that who is relying on the Federal Reserve to continue to buy it all. This started during the last meltdown and it has accelerated since that particular time. And that's the environment we are in. It's not real. It's being supported by easy money. The market is very close to all-time record highs, and it's going higher. There's no doubt about it. But we need to, again, look at a few things. Let's start off with the dollar. Okay. The U.S. dollar index, or the DXY, DXY, and you can see this right on my website, traderschoice.net, top of the second page. I have so much information on my website for you, and it's all free. Just go have a look at it. There's a link in the description of this video. The dollar has taken a beating lately, a serious beating. We got a dollar index that was like 93 and change, which is now at like 90 and change over just the last several weeks. That is a big move for the dollar index now. What does that mean? You all know, and I think you understand, the dollar is a dying asset by design as well. We have a central bank that's buying it all, printing cash out of thin air. I told you about the revolving door. I mean, this is an amazing phenomenon. We have central banks, the Federal Reserve, let's talk about the Fed, who's creating debt out of thin air. They're just adding digits to a screen. A dollar is a unit of debt. So that's one door. Through the other door, they're buying assets with it. They're buying debt with it, okay, to keep the bond market in check. Okay, so in one door, out the other. In one door, out the other. This mechanism is massively inflationary. Okay, duh. Several more duh. I think we all got that. So again, the dollar, the DXY, it's taken a big hit lately. And I would expect, okay, I'm just going to say it, the dollar to bounce. Again, no asset goes up in a straight line or down in a straight line without a little corrective phase. So this move in the dollar is pretty significant. So to me, I would expect the dollar to do one of two things moving forward, and that's going to affect the price action of other assets. What am I talking about? Okay. So if we do get a bounce here in the dollar, or the dollar stabilizes where it is, that is not necessarily positive for the stock market. And then we have crude oil to watch. We'll talk about that in a second here. I would expect to see a bounce relatively soon in the dollar. I'm not saying anything profound. I don't think we're going back up to 93 again with regard to the Dixie. We were at 93.4 something or other just a few weeks ago with regard to the Dixie again. So we've gone down pretty substantially. I would expect a little bounce here with regard to the dollar. If that occurs, well, what would that do to other assets? Well, we all understand that, it's kind of a no-brainer here. The stock market does not want a stronger dollar in any way, shape, or form. A stronger dollar is stock market negative. So if we get a bounce here and crude oil does not put on a gain, again, we'll talk about that in a second, I would expect the market to remain flat, maybe consolidate where we are, or maybe even fall into some pressure here. I've explained to you that I think this market is in a little bit or some kind of a corrective phase. This corrective phase needs a catalyst, okay? And that may be the dollar here, depending on what the dollar does. So keep your eye on the Dixie. So with that said, again, pretty simple. A dollar bounce here, maybe we'll see it tomorrow, I don't know, would be not positive for the stock market. Now, they got to prop up crude oil, people. They're going to do it. I don't know when, but they're going to do it. Crude oil is the lifeblood of the military-industrial complex. The entire energy sector relies on crude oil. The entire financial sector, the banks, the investment banks, rely on the price of crude oil going higher. Again, they're leveraged beyond their eyeballs. So, crude oil here needs to be propped up. Now, with a stronger dollar, being that crude oil is priced in dollars, that's negative for crude. So again, there's another little caveat we have to consider when we're looking at market direction, stock market direction. So if we get a bounce here in the dollar, it potentially could pressure crude oil, and these two things could pressure the stock market. You understand? Like I said, we may be in some kind of a corrective phase in the market, which it clearly needs. I mean, that's a no-brainer. The stock market has gone straight the freak up. It's so stupid, and there's no price discovery mechanism here with the stock market either. It's in a hyper bubble on the back of the debt bubble, and the back of the debt bubble it's epic, and it's not going to stop anytime soon with the Fed buying it all. Very simple. So we got the dollar index we got to worry about this week. We got crude oil we have to worry about this week. Now the 10-year yield. Let's talk about the 10-year yield. You know how important this is as well. 10-year yield has not only stabilized, but it has come down. Now, I think some of that is a little fear. The market is smelling something here, and I think, again, plays right into what I've been explaining to you. I think the market is in a corrective phase, which it clearly needs. So, just keeping our eyes on the Dixie, the dollar index, keeping our eyes on crude oil, and keeping our eyes on the 10-year yield. Again, where can you find all this stuff? Right here on my website, traderschoice.net, top of the second page. Everything is there. By keeping your eyes on this unholy trinity, we will have an idea as to what the stock market is going to do. Very simple. Let's look at a couple of other assets as well. If, in fact, the dollar bounces here, and again, I'm expecting this, there's going to be opportunity for you and I to acquire physical gold and physical silver. Why? We also understand physical gold and silver have no price discovery mechanism at all. Okay, it's not real. The hard asset derives value from a derivative. Who came up with that? It must have been a banker. Yes, it just happened to be. So if in fact we get a bounce here in the dollar, we would expect to see precious metals fall under some pressure. And to me, it's a lovely thing. It's a lovely thing. It allows us, again, to bet against the debt and become our own central bank. Period. The end. Easy, simple, very straightforward. Let's talk about cryptocurrencies lately. All right, first of all, I hope you got to see the Crypto Kids video. He did yesterday, put it out. I I think his work is exemplary, and I think most of you agree. Now, cryptocurrencies are definitely in some kind of a corrective phase right now. Okay. Beautiful. Lovely. This is what we need. Again, no asset goes straight up or straight down without a corrective phase. So we had Bitcoin 63, 2000, whatever the heck it was. Now we're at 49,000. We've seen this before. And a lot of this is being sparked by, threats of regulation, the Treasury threatening to, crack down on Bitcoin because it's being used for criminal activity, duh, like the dollar isn't. You can't make it up. You can't do it. And then, of course, you got JP Morgan saying, oh, we're in for a crash with regard to cryptocurrencies because they want you in the dollar. They want to scare you out of it. And I know a lot of you just get it. You understand what's going on here. We are in an environment where the dollar is being destroyed. Destroyed by design in its current form to issue in a new dollar. 100% digital, 100% fiat. Okay, you want to stay in the dollar? Good for you. Even if it bounces here, good for you. Trust me, I'm not going to be there. And from a guy who's pretty much called this whole scenario about 90% accurate, I think what I'm saying is true. And I know you get it if you follow this blog and you're on. If you follow this blog, you are so on top of it, you probably could do your own blog. And I wish some of you would actually do that. All right, anyway, so look, that's the scenario. That's where we are with regard to everything here. So what are the takeaways from this lovely video? Watch that Dixie. Watch the dollar index. Again, from 93 and change down to 90 and change. I would expect a little bounce here. That's a significant move. That bounce would pressure the stock market. That bounce would put pressure on precious metals. It may even affect cryptocurrencies to the downside as well. And I think that's a buying opportunity. I'm not going to change my stance on it. I know a lot of you are saying, oh, Greg is going to change his tune when Bitcoin drops to whatever. No, I'm not. I am not going to. I don't care. I don't care. You see, some of you don't seem to understand that. I do not trade cryptocurrencies. I am a holder of them. I will look for opportunities to buy more. If Bitcoin were to be cut in half from where it is today, I think that would be beautiful because I would buy more of it. I'm telling you the truth. So that's my take on that. And with regard to precious metals, I don't care either. If they were to get cut in half, I would buy more because this environment of look, I'm going crazy. Central banks here, they're going to inflate beyond your wildest dreams. Your eyeballs are going to explode at one point when you're looking at what they're doing or hearing about it. It's just out of control. So you want to be on the opposite side of that trade. And that involves physical gold, holding physical gold, holding physical silver. And yes, cryptocurrencies. If you are a trader of cryptocurrencies, well, you know what? You're sitting pretty too. You're probably getting short. You're probably finding ways to short it. Lovely. It's going to turn around. It's going to turn around unless they actually do start regulating it, unless the Treasury actually cracks down on it. But we've heard this 100 times, more than 100 times, and it never happens. I don't know. I tend to use the past to gauge where we're going to go in the future. The past can teach us lessons. All right, people, look, this guy here loves you a lot. I mean that. I really, really do. So please get this video out there. Share this video. I will see all of you in the morning, and I'm just going to be loving it. I'm out of here.